Welcome to Wealth Coffee Chats, folks, for your daily live updates. Get the most out of today's episode by participating in the chat. Make sure you ask some questions, be part of the conversation, have a bit of fun, grab a coffee or a tea, take some notes and get ready to start your day, folks. Quick few housekeeping rules, though. No spamming, no advertising or self-promotion in the chat. That's not on. Be kind and respectful to everyone when participating. And most of all, have a good time. Real estate investing can be your biggest asset. It also can be your most expensive asset when it comes to getting it right or getting it wrong, folks. It can be time-consuming, stressful, and that's why here at Positive, we have what's called a 6-star team, a full-service team that provides integrated wealth and property investing solutions and services simply designed to help you progress towards your goal of passive income through your property portfolio, folks. Make sure you check out our other podcasts on the Positive Mentor Network. Not only is there Wealth Coffee Chats, there's the Urban Property Investor. Drops every Wednesday with straight talking investing strategies and lessons with Sam Saggers. Property Investor Tales. This is where our clients, you guys, share real life stories from property investing, hosted by some of our advisors and strategists. And that's done every fortnight, dropping every Monday. Wealth, Wine and Wisdom, folks, that debriefs the week that was in the world of finance and property, hosted by yours truly, Jason Witten and Andy Fenton on Fridays. Hey, good morning, folks.
Good morning, everybody. Welcome to another Wealth Coffee Chat.
Hope you're well, folks, wherever you are.
There it is, team. Morning. Morning, wherever you're tuning in from today.
Early bird gets the worm, they say. Here at Positive, we offer a 6-star team. It's a team that help you at every stage of your wealth creation journey.
General advice disclaimer. The information provided and made available through this podcast does not constitute financial advice. The information is of a general nature only and does not take into account your individual objectives, a financial situation, or needs. It should not be used, relied upon, or treated as a substitute for specific professional advice. We recommend that you obtain your own independent professional advice before making any decision in relation to your particular requirements or circumstances. Positive Tax Solutions and its representatives do not warrant the accuracy, completeness, or currency of the information provided on and made available through this podcast.
Good morning, everyone. Kim Wolfenden here. Welcome to Wealth Coffee Chats Tax Tuesday edition, brought to you by Positive Tax Solutions. Today, I want to talk to you briefly about how to take the trauma out of tax time for property investors. And basically, it's record keeping. Perhaps not the most exciting topic, but definitely an important one. And why do I want to talk about this today? In the last couple of weeks, I've had a couple of clients reaching out to us saying, please help. I can't find my records. I don't know where all my documents are. I know I've got all these deductions, but I can't give you what you need to make sure that I can claim these things. So I think I can just offer some practical tips to you all today. I'm sure you already know them all, but I think it's a timely reminder. Normally for our clients at Positive Tax Solutions in April every year, we do 2 live webinars where we go through all of this with you. We remind you what you are able to deduct and how you can legally make these deductions, including what records you need to keep. But I don't want to wait till April to remind everyone. There's a lot of you out there who are not clients of ours. So I thought this would be a timely reminder just before we close out the year. So why does record keeping matter? I guess the first one is to reduce the end of year stress. If you keep a proper system and update it regularly, you will reduce the trauma that you will have at tax time. Secondly, and very importantly, obviously, is compliance. The ATO does focus on property investment claims, and if you want to avoid ATO penalties and stay on the right side of the ATO and not be audited, best to keep the proper records. You need to be able to substantiate your deductions. You can't just have a bank statement that shows ins and outs. You must have the foundational document, the invoice, the contract, what have you, to justify your income and expenses. And that's also important if you have an investment property and you decide to sell. You need to be able to have accurate supporting documents to make your capital gains tax calculations. So what records must you keep? There's, I guess, maybe 4 main categories. There's income, there's expenses, there's your acquisition and sale documents, and there's also the ongoing property use and ownership. So in relation to income, you obviously need to keep a record of the rent that you receive, the amounts going into your account, as well as the lease agreements that substantiate those amounts. If you've claimed on any rental bonds, that is also treated as income, as well as insurance payouts for loss or damage or loss of rent. They are also considered to be income. Expenses include, obviously, repairs and maintenance, property management fees, insurance premiums, interest payments with the substantiating loan documents, and all of the other expenses, rates, taxes, strata levies, utilities, etc. You should keep, as I said, not just the bank statements that show these expenses going out, but also the supporting documents. So detailed invoices for the repairs and maintenance, the property management agreement, the insurance documents, your loan documents, and the rates notices, tax notices, etc., etc. I guess another one that possibly falls within this that is not really expense is renovations and capital improvements. If you carry out renovations and capital improvements, they're treated differently tax-wise to repairs and maintenance. So make sure that you have all of the contracts and the invoices that you have in relation to that work, and also a depreciation schedule to so that you can properly depreciate those items in your tax return every year. So the third category that I referred to was acquisition and sale. So you obviously want your purchase and sale contracts. You need to hang on to them, even if it's years ago when you bought the property. When you decide to sell and it's been an investment, you'll need to work out the cost base to work out your capital gains tax. So you need the purchase contract, evidence of the stamp duty paid, evidence of any other purchase or sale costs, such as legal fees, settlement statements that you receive from your lawyer on purchase and sale. And yes, as I just mentioned before, in terms of calculating the cost base of your property for capital gains tax purposes, evidence of any improvements or capital works throughout the life of your investment property. And then the other one is property use. So a lot of us might have an investment property which is on the beach, in the mountains, and perhaps sometimes we use it for our own personal use. You need to keep very detailed and accurate records of when the property is genuinely available for rent and when we use it for private use. There's a heads up, I don't know whether anyone's spoken about this yet on Wealth Coffee Chats, but there's a draft ATO ruling where deductions like for interest rates, maintenance, etc., on holiday homes may be denied unless the property is mainly used to generate rental income. So just watch out for that one. How long do you need to keep your records? You need to keep them for 5 years after lodging your returns, and for 5 years after you sell a property for capital gains tax purposes. So just to sum up, here are some hopefully practical record keeping tips. I recommend that you schedule a monthly meeting with yourself to review and update your records. Grab your favorite beverage, sit down for an hour or two, however long it takes you, depending upon how many investment properties you have, and make sure that you've got all your records up to date. Digitize everything. If you get a physical receipt or if there's a physical contract, have a go at scanning it and uploading it to a folder on your laptop, and make sure that everything is backed up to the cloud so you don't lose it. Make sure that all of your invoices, make sure this is especially important so that you can differentiate between repairs and maintenance and renovations, because they're dealt differently tax-wise. On your computer, use folders, categorize everything. Use a spreadsheet. For our clients at POS Tax, if they ask for it, we can give them a spreadsheet which has months across the top and then categories down the side, and you can easily just drop in all the numbers there, and then in a separate folder on your computer, keep all of the foundational documents to evidence those income and expense amounts. Keep a diary or somehow track the vacancy and private use dates of your investment property. Another idea would be to keep photos of before and afters for any renovations that you do. And then in addition to the monthly meeting with yourself, just do an annual review maybe in May of each year, so that you've got time to sort things out that are missing before 30 June. So to summarize, keep everything, keep everything separate, organize everything in folders and back everything up. Think like a business. Investing in property is a business, and make sure you retain everything for the required amount of time. If you've got any questions, need any help, you're welcome to reach out to us at POS Tax. Very, very happy to help you. Otherwise, have a great day and see you next time.
Thanks for watching another episode of Wealth Coffee Chat, folks. Make sure you like, subscribe, and turn on your notifications so you never miss a thing when we go live. Improve your portfolio and investing game, folks, with Wealth Coffee Chats live every morning at 8:10 each weekday. Make sure you join us. Previous episodes are also available wherever you get your podcasts, folks, as well as our other podcasts from the 6-Star team here at positivementor.com.au.